Hey, what's up, everybody? Drew, aka Catching Rockets here. The other day, I asked in one of the discords what people would like to see a video on, and I got like an overwhelming response to entries and exits on, or how I take my entries and exits on trading. And I figure I'll keep it along the lines of what I've been teaching in my other videos in the trading series on my playlist. Um, I'm actually a reversal trader mostly, but I also do a little bit of momentum trading. Reversal trading is, exactly what it sounds like. You're looking for reversals. I'm either trying to catch the top or the bottom of plays and either ride them up or ride them down. This is a pretty risky way of trading and requires a lot of experience. Momentum trading is a little bit easier, and that will be primarily how you see most retail traders trading. Anyway, we're going to do replay on SPY 3 minute. Show you guys basically how I take entries. I haven't pre-planned any of this. I've glanced at the chart, but I haven't looked at it close or in depth. So basically, here we have a bear flag forming. So this here is going to be our flagpole. You should recognize these as soon as they start to form. Like by this candle here, you should have a good idea. And by this candle, you should definitely know you have a flag forming, bearish or bullish, whichever way. So this here is the top of our flag, which I really don't care about. I don't draw them. And this is going to be the bottom of our flag. And here's our flagpole. So as soon as you see these things, forming, you want to grab the bottom of the flagpole, the top, in this case, the bottom of the flagpole, to the bottom, and draw your fib levels. The other thing people were requesting was my exits on plays. These are the fib levels that I use. So you might want to screenshot this really quick and copy them, or you can always rewatch the video and grab them then, or pause. So when you have a flag form, your entry, I'm going to delete this flag right now really quick just to draw some stuff, make things more clear. So right now, my safe entry is going to be the last touch of this trend line. So as of now, the last touch of my flag is this candle right here. So where it touched here, that will be my entry. If a candle comes down and crosses through this yellow line at 433.96, I would take puts. Technically, if you've been following along, you know that this is no longer a bear flag because it touches and crosses through our 0.5 fib right here. This right here, the 0.5 fib, invalidates the flag. However, I will still play the break of these because sometimes, a lot of times they'll still make the same move as a bear flag. And I know in this case it does. So if I have another candle touch this trend line and then bounce back up, that new touch will become my safe entry. So let's just play this out really quick. I've got this pretty fast, so I would have to be quick with my pausing to catch it. But so you can see this is why this is our safe entry here. We still haven't crossed through it. We came down and then we have a pretty big wick back up. If we took the break of the trend line, there's a chance you might get faked out. You can take the break of the trend line. It's just going to be riskier trading. Your safer is going to be the last touch of the trend line. So if this does bounce back up, our new safe entry is going to become where this candle touched the trend line. And we're going to extend this trend line out here. And you're going to do this as as the candles are moving, as you're trading. That might seem a little overwhelming, but once you do it a few times, it starts to get easier. And really, like, you have to have that cool, calm mindset when you're trading. If you don't have time to draw stuff out, you're probably overly excited or overly emotional, and worrying about FOMOing into a trade. So take the time, draw everything out, draw your fibs, and take your trades that way. So let's keep playing this out. So as you can see here, again, if I didn't take the safe entry here, good chance I'm getting faked out here. However, a good trader will probably look at the VWAP and be like, we're still below the VWAP. I'm probably still good. A break of the VWAP here, like a close above it, you're probably wanting to hop out of this trade if you're already in it. If you took the break of the trend line. A couple more candles here. Let's see what happens. Yeah, here, most people would get stopped out here. If not, well, we're hitting a supply zone, so you might stay in it. But so now, our new safe entry is going to be this touch here, right? So let's grab this, move it up. So now when I cross below this yellow line, I would take puts. Let's keep playing. Boom, I'm in the trade right now. There's a few ways you can enter the trade. It's kind of hard for me to show. I use Active Trader. A lot of times if I'm looking to grab the break of, if I'm playing momentum trading, if I'm looking to grab the break of a bear flag or whatever it is, ascending wedge, blah, 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 I will put a stop order on Active Trader. Basically meaning if it crosses, in this case, below 434.65, Active Trader will automatically fill me on puts at a market order. Anyway, so right now we're in this trade. We want to have our fibs drawn. I mean, I didn't draw them earlier, just so my screen wasn't overly cluttered while we were watching this flag play out. My first trim, so here's for everybody asking me, where do I exit trades? My first trim is going to be the 1272 level. Second trim is the 1618. Third trim is the 1786. Each of these respectively become your stop loss. So let's say you grab 3 contracts here on the break of this, the last touch here on this yellow line at 434.65. If I grab 3 contracts, when I hit the 272 level, I'm going to sell 1. If I then come down and hit the 1618, I'm going to sell a second one. If I come down lower and hit the 786, I'm going to sell the third. The inverse of that is if I come down and hit 272 and keep going through it, but then bounce and come back and touch it, I'm going to sell my last 2 contracts on the touch of the 272 level. This will become my stop loss. If I don't make it to 272, this trade is never going red. Once I'm, in the money significantly, whatever significant is to you, 10, 20%, doesn't matter. I will never let this go back to red. So I'll take my profits, even if they're smallish. Anyway, let's keep letting this play out. Boom. I'm out of the trade here. I took my first trim. I will see if it goes further, if I'm holding multiple contracts. Right here, I stopped out. I know these candles are moving super fast, but if I don't do it like this, the video will take forever. But so our first bear flag was successful. We hit our 272 level, and now we are forming a second flag here. Okay. So as of right now, our safe entry is going to be a break of the last touch of this candle. We're going to draw our fibs from bottom to top. And for anybody that this isn't making sense, you'll want to just go through my playlist. I've covered how to trade flags pretty extensively. Like I mentioned, I don't draw like the top of the flag. So in this case, this is actually a bear pennant, and I don't draw my flagpole because I don't need either one of them to make this trade. All I need to know is when I break my trend line and where my last touch is. So anyway, to keep things cleaner and less complicated, I'm going to remove those two things. And let's keep playing this out. Boom, I'm in the trade right here. Okay, and I'm playing down to the 272 level. Another thing that's good to notice is our first flag. Where was it? Sorry. Whoa. Our first flag, if we put our fibs back on, notice at the 272 level, we formed another flag. So this is like the normal ebb and flow of the market. We never go straight down. We go down, up, you know, higher lows, lower highs, higher lows, lower highs, so on and so forth, right? So good to notice that right here at the 272 level, we're forming a new bear flag. So as an option day trader, you know, on the break of this one here, you're probably wanting to grab like 432 puts, play those down. By the 272, you've made good money. And then you'll want to roll down to lower contracts for this next flag that forms, whatever that is, 431, 430s. Anyway, let me get this fib off to remove some of the clutter. So now our next target is going to be this 272 level. So let's hit play. So we're still in this. We're actually forming a new flag here. Ish. It's not pretty. I'm below the 90 MA. I'm below the VWAP. I'm good. Still in this trade. Well, this has hit the 50, so it's not quite a flag. Again, I'm going to delete these fibs. I don't want this to get overly cluttered. And let's hit play again here. So we get there. It wasn't a fun trade. Personally, I never would have got stopped out of this, but it would be sketchy in through here. So anyway, here's our first trim, 272. Let's see if we hit the 618. Boom, second trim. So right now this is working out to be a nice trade. Also, we did form another little flag here, and our safe entry, excuse me, is going to be right here on the last touch, which actually kind of lines up with the trend line. Personally, I hate it when flags are downward like this. Here's the top of our flag. So again, this is like a bull pennant. I mean, a bear pennant, I'm sorry. Anyway, now we'll see if we hit the 786. Boom, third trim. This becomes our stop loss, so we're out here. So this is a great trade. And so now, you should know here we're forming another flag, right? Or possibly. Right there. Let's get these fibs off the screen. I'm not going to do too many more of these because it's just the same, you know, repetitive over and over and over again. But hopefully this gives you guys a good idea of how to get in and out of trades, I hope. Let's play this out a little bit more. So I forgot to draw it, but our safe entry, right, is going to be the last touch here of this trend line. So right here we would take puts. This is a smaller play. It's a smaller flag, and we're going to hop out at the 272 level. I mean, this is still money, small or not. Like, you're at least going to make 20% at the 272, possibly 30 or 40%. Right here, you're probably getting faked out. So, I mean, yeah, I'm very out of this trade. Like I said, I wouldn't let this go red. I would take my profits, even if they're small, 5%, doesn't matter. Anyway, so let's let this keep playing out. See if we can find another flag. So here we go. Forming a little bit of a flag here. Our it's actually a big flag. Fibs. So this one should take us down to 429.26. Just something to think about when you're looking to buy contracts. You know, you can look at the 428s here, 429s. So as of right now, depending on how you do it, our entry is going to be either here, or you can consider this a touch here. It doesn't really matter. I would take the break of this line here. So again, sorry, it's super fast. Whichever line you're using, you know, we're in the trade here or here, and we're looking for this 272 level. So, and there, boom, we take our profits. And if you had several, you stopped out, like, so you're good. I think that's going to do it. I mean, we're sitting at like almost a 20-minute video here. Hopefully this helps people out, because it was a pretty overwhelming response when I asked on Discord what people wanted to see a video on, entries and exits. This is literally, you know, from my trading series, my playlist, I've been telling people, you know, focus on learning bull flags and bear flags first. They happen a lot on the charts. They're pretty simple to trade. They should be fairly easy to spot. And if you're having trouble trading them or spotting them, I'm not talking down to you. That's just going to come with a little bit of experience. But the, you know, once you get it, they play out, you know, roughly 80% of the time. So this is a very favorable trade to take as a trader. You know, if you do these consistently over and over and over again, you should be profitable. If you're not profitable, you're not taking profits soon enough, and you're letting losers run too far in the red. You need to be stopping out, you know, at -10, -20%. You need to make sure you're using proper risk management and proper account sizing. Without those two things, you'll never make it as a trader. So if you follow all of those rules, like this will work out in your favor. You will be profitable. You will be consistent. You will make money day after day. If you have a smaller account, it might seem really slow in the beginning, but those compounding gains grow really, really, really fast. So anyway, that's going to do it for this video. Much love, everybody. Thanks for tuning in. Take care. Have a good rest of your weekend. Bye.